Is your crypto portfolio basically a flatline? Yeah, you're not alone. The moonshot we were all geared up for seems to have fizzled out, and your portfolio is going absolutely nowhere. Bitcoin is chopping sideways, altcoins are bleeding, and the bull run we were promised feels more like a myth. But what if I told you this is all going according to plan? This isn't the end. This is a calculated pause. There are powerful hidden forces at play, from Wall Street to the world's central banks, that are pinning this market down. Today we're pulling back the curtain on them. Understanding these forces is the only way you're going to avoid getting shaken out right before the real fireworks start. Forget the headlines. This is what the smart money is really watching. Let's be real, it's a brutal environment. After struggling to break key resistance levels earlier in the year, Bitcoin has been trapped in a frustrating, choppy range. For weeks, it feels like every glimmer of hope gets immediately smashed back down. The market is gripped by fear, sentiment indexes are showing extreme caution, a level we haven't seen in ages. Meanwhile, the headlines are screaming crypto winter, and Google searches for Bitcoin bear market are spiking, a classic sign of retail panic. It's a soul-crushing cycle. A small rally gets your hopes up, only for it to be wiped out, leaving you wondering if you've made a terrible mistake. This is the exact point where most people give up. They lose faith, they capitulate, and they sell their bags for a loss, right as the big players are quietly getting into position. But you're not going to be one of them, because in this video, we're not just looking at the price, we're looking at what's moving it. So, what's actually happening? Why are prices being held down? It's not just one thing, it's a powerful cocktail of three hidden forces putting a lid on the market. First is what I call the Great Institutional Shuffle. The story that the institutions are coming has changed. They're here, but they're moving their pieces on the board in a way nobody expected. Second, we have massive macroeconomic headwinds. The decisions being made by central banks, especially the Federal Reserve, are creating huge uncertainty and sucking liquidity out of speculative assets like crypto. And third is the leverage engine backfire. The derivatives market, which used to be the fuel for explosive moves up, is now the very thing that's assassinating every rally before it can even get started. Let's break each one down. By the end of this, you won't see a market that's stuck, you'll see a market that is coiling up for its next big move. For years, the crypto mantra was, just wait for the institutions. In 2024, they showed up in force with the spot Bitcoin ETFs, and for a while, it was pure rocket fuel. But here in late 2025, the picture has gotten a lot murkier. Frankly, the massive institutional inflows into Bitcoin and Ethereum ETFs have dried up. In fact, we've recently seen extended periods of net outflows from these major funds. This pulls a huge source of buying pressure right out from under the market. When the biggest wallets are hitting the sell button or just sitting on the sidelines, it's almost impossible for prices to get any real traction. We're seeing institutions get spooked by the same things everyone else is: volatility in the stock market and confusion about where the economy is headed next. But here's the twist. The part the news isn't covering. Institutional money hasn't really left crypto, it's just gotten a whole lot smarter. While the main ETFs for Bitcoin and Ethereum are seeing choppy flows, a completely different story is playing out under the surface. Institutional demand is rotating. They're making specific calculated bets on crypto infrastructure and real-world asset tokenization projects. They are looking past Bitcoin and are now sophisticated enough to hunt for value in specific assets they believe have unique utility or a clearer path forward. This is the Great Institutional Shuffle, a market where broad, passive buy Bitcoin money is on pause, but sharp targeted smart money is actively finding new homes. The average person just sees BTC going sideways, but the pros see capital rotating and setting up for the next chapter of this bull market. Now for our second force, the global economy. Crypto doesn't live in its own universe anymore. It's a global macro asset, which means we are all riding the waves created by the world's most powerful central banks, especially the US Federal Reserve. The Fed recently cut interest rates, which should have been fantastic news for assets like crypto. Cheaper money is supposed to encourage investment into higher risk, higher reward plays. And yet the market barely moved. In fact, prices dipped right after the announcement. Why? Because the market had already priced in a series of aggressive cuts for 2026. Instead, Fed Chair Jerome Powell came out with a much more cautious tone, signaling that the inflation fight isn't over, and they might have to stay tight for longer than expected. That creates uncertainty, and big money absolutely hates uncertainty. This cautious stance keeps government bonds looking attractive, giving investors a safe place to earn a return instead of gambling on crypto. And it's not just the Fed. We also have to watch what's happening with the Bank of Japan, BOJ. For years, a strategy called the yen carry trade has provided a fire hose of liquidity for global markets. Investors would borrow money for next to nothing in Japan and invest it in higher-yielding assets worldwide, including crypto. Now, with Japan finally seeing its own inflation, the BOJ is signaling that it might raise rates. This threatens to turn off that liquidity tap. If that trade unwinds, billions could be pulled from global markets, crypto included, as those loans get paid back. This potential liquidity drain is a massive storm cloud that professional investors are watching very closely. The market is stuck in this tug-of-war between the hope for cheaper money from the Fed and the fear that the global pool of liquidity is about to shrink. The third hidden force is the one responsible for those violent, rally-killing price drops, the derivatives market. In simple terms, the crypto market is still broken by way too much leverage. In a healthy rally, prices rise because people are buying the actual asset, what we call spot buying. But for much of the last year, our rallies have been ghost-driven by speculation in the futures market. Traders use insane amounts of leverage, sometimes 100 to 1, to make bets on where the price is headed. This creates an incredibly fragile house of cards. The final quarter of 2025 has been marked by huge deleveraging events, where billions in these leveraged positions have been forcefully liquidated. When the price dips even slightly, these long positions are automatically sold off, which forces the price down further, which triggers more liquidations. It's a death spiral. This is exactly why every rally attempt feels like it hits a brick wall. A little bit of real buying starts, the price inches up, and it lures in all the gamblers with their leveraged positions. Then, at the first sign of trouble, the liquidation cascade begins and smashes the price right back down. It's a vicious cycle that punishes gamblers and rewards patient people who aren't playing with fire. Until this ridiculous excess leverage is flushed out, the market is likely to stay trapped in this frustrating sideways grind. It's a painful cleansing process, but it's absolutely necessary to build a healthy foundation for the next real leg up. I know that hearing about all these headwinds can be a little discouraging, but looking these forces in the eye is what gives you an edge. While everyone else is running around in a panic, you can see the chessboard for what it is. This isn't a time for fear. It's a time for patience and a clear head. The kind of analysis we just did is exactly what I share every single week in my free newsletter. We cut through the noise and focus on the data that actually matters. If you want to stay ahead of the curve and not get shaken out, the link is in the description. It's free, and it's the best way to arm yourself for what's coming. So what's the move? You have to reframe your thinking. This choppy, boring market is not a crisis. It's an opportunity. This is your final chance to accumulate at prices that will probably look like an absolute gift a year from now. On-chain data shows that long-term holders and whales are treating these dips as a fire sale, quietly adding to their positions while retail traders sell in a panic. The bull run hasn't been canceled. It's just being reloaded. The market is cleaning house, institutional money is getting surgical, and we're all waiting for these macroeconomic clouds to part. So, let's put it all together. The market isn't stuck because crypto is dead. It's stuck because of a perfect storm of short-term pressures that are holding it down. First, the great institutional shuffle, where the big dumb money has paused, while the smart money is strategically moving into new positions. Second, the macroeconomic headwinds from central banks, which are creating uncertainty and threatening to drain liquidity from the system. And third, the leverage engine backfire, where cascades of liquidations are killing every rally and stopping any real momentum. These forces are strong, but they are temporary. The leverage will burn itself out, the Fed will eventually give a clear signal, and institutional money will come roaring back once the coast is clear. The people who are panic selling now will be the same people buying back from you at much higher prices later. The smart money isn't selling, they're waiting, they're accumulating. They know the bull run isn't derailed, it's just delayed. Stay patient, stay informed, and think strategically. The real move is still ahead of us.